wanted to ask you about deal flow a little bit. How did the M&A deal flow change from the first to second quarters? Where do you think we'll be sort of by the end of the year?
So the first quarter, again, because everything kind of happened towards the end of March, didn't really seem to take a hit. The second quarter definitely was a slowdown, probably more because you had sellers that were unwilling to sell. Buyers were ready with a lot of dry powder and, trying to advantageous deals for themselves. But the sellers were able to get a lot of capital to kind of maintain cash flow and hold cash flow for a period of time. I think that'll start to change as the virus potentially drags on and the economy slows down even more. So I think you might see some more deal flow end of this year, definitely beginning of next year.
So with the public markets in a state of extreme volatility in recent months and perpetual volatility in the last 10 years pretty much, IPOs have become less and less attractive of an option. And I'm wondering if you've seen any evolutions in exit strategies recently and if you expect them to continue in the future.
Well, you're right about a lot of the public market options being kind of taken off the table. What we've seen is SPACs, which are special purpose acquisition corps, have really started to flood the market. So as of June 30th, 45 SPACs had IPO'd. There's an anticipation by the end of 2020, there'll be over 100 that have gone public. Happens to be an area of specialty for the firm. So we have done a number of SPACs, taking them public, and also have seen a lot of deal flow through those public markets.
Does that kind of a strategy seem like it has staying power?
It's an easier way to go public for you to do a reverse merger into a SPAC than it is to start an IPO process from the beginning.